Hello, everyone. Well, today is the 3rd of May 2020. It's a Sunday evening, and I thought of sharing uh, my thoughts on one of the quotes of Mr. Warren Buffett, which is on patience. And so I thought the apt uh, subject for this video should be if Mr. Warren Buffett was a trader and the role of patience in trading. Now, I personally uh, love few of his quotes, especially the one where he says, "You should be greedy when everyone is fearful, and you should be very fearful when everyone is greedy." But the topic of this video essentially revolves around this quote, where he says that the stock market is a device for transferring money from the impatient to the patient. So essentially, he's telling us that patience is very, very important. But patience, from the perspective of an investor, can be very, very different from patience of a trader. The main differentiating factor here is in terms of time. The time that an investor has back of his mind to have patience is, of course, very, very different from a trader's mind in which he allocates time towards his trade. And also, um, I feel that patience for an investor or a trader comes from the perspective of the entry or the exit of a trade. Let me try and explain myself further in this video. Let's talk about an investor. An investor looks for quality company. To reach out to this quality company, he looks at or he uses fundamental analysis. I personally do not use, but two main factors for me, if I had to, would be management and earnings, consistent earnings. So, going back to the investor, he looks at a company, he evaluates various companies, he uses fundamental analysis, calculates various ratios, and what is he looking at? He's looking at valuation. He's not looking at price. He's looking at the valuation, the future prospect of that particular company. And this is what an investor does. He spends time to do this. And once he decides, all right, this is where I'm willing to put in my money, my capital, I'm going to take a risk on that, he will essentially take a stake or he will buy into that company. All right. And we all know that investments, an investor is essentially talking in terms of multiple years. Let's say 2 to 3 years. Is too less, but let's say 2 to 3 years. More the merrier. In fact, um, if you like the business model, if you like the company, if you believe in the growth prospect, then you should not actually attach any time um, for your exit. And I think that is the crux of Warren Buffett's quote over here. He's talking about that the patience you need to hold on to your positions, and if you believe in it and if you hold on to it for a longer period of time, it's going to reap far more returns, and that returns essentially comes from those who did not have that conviction or belief, essentially the impatient. So the money from the impatient is going to the patient the more you hold on to it. So let's go back to this slide. So if we try and make sense out of that quote, essentially what he's trying to suggest us is, do not be impatient to exit from your position. Patiently hold on to your position, because if everything is fine and everything is holding well, ceteris paribus, in terms of the fundamentals of the sector and the company, The short term oscillations or volatility of the market is something you should not be too worried about. And in the overall long term, patience will definitely play out and you can make windfall or multi bag returns. So the patience from an investor's point of view comes from his exit, not the entry. Of course, to enter a trade or an investment, you need time to do your research and analysis. I understand. Even if you don't do all this and you read some good magazines or you get some good advice. So, for your entry, the patience is not as relevant in this quote as much as it is from the perspective of exit. So patiently hold on to your position. Something which comes to my mind is an ad which I saw, I think, for one of our Indian brokers is buy right, sit tight. So sit tight. This is where the patient Mr. Buffett is suggesting us, which is true, which is essential. Right? Agree? Now, what about a trader? What about a trader? Will you think that after taking a trader should also show that kind of patience and hold on to his positions? Well, in my one of these slides, I did mention here time, right? Time plays a big differentiating factor between an investor and a trader. A trader is someone who would like to do quick trades in and out of the market for quick money. For him, the important point of concern is price. Now, let's try and understand. A trader is looking at a price and his decisions of entry exit is based on price, and this price is not constant, it changes regularly. But if you look at the fundamental factors, do they change regularly? Of course not. They take time to change. So an investor, once he has decided upon a company, may not alter his decision whether to exit or not. Does not happen on a regular basis. He need not check it because the parameters based on which he has laid down his hypothesis to buy, it does not change that regularly. But for a trader, it changes regularly. So the shorter the time frame of the trader, the quicker the oscillation, the quicker the volatility. And for him, timing is extremely important. Your point of entry and your point of exit, this, the time in between that spend, and the exact point of your entry and the exact point of your exit, entry and exit, plays an extremely important role. Because if you're an investor and you buy a stock, and if it comes down by 5, 10, 8%, you can still hold on to it because you check your fundamental parameters and say, okay, everything looks to be fine, it's just the market overbought, it's easing off. But a trader cannot allow 2, 3, 5% from his entry point to come down, and he cannot feel comfortable about it. He will not be comfortable at all, especially if it's in the derivatives market. So timing is extremely important for a trader, right? So where does the role of patience come into play? Because if you're listening to me and if you have ever traded in the stock market, you know that once you have done the trade, what goes inside you after you have taken the trade behaves very, very differently. As long as you have not taken the trade, you're kind of calm and normal, all right, you're looking for an opportunity. But once the trade is on, you feel very, very different. You generally look at each and every movement of the price and you want the price to go significantly up if you have bought, or crash if you have sold, so that you make a quick buck out of the market, right? So where does the role of patience come into for a trader? He's not patient. He's definitely not as patient as an investor in points of exit. The way I see it, it is 100% just the opposite. A trader should be patient when it comes to entry, not exit. What do I mean by this? Is you wait for the right opportunity. You should not be compulsive. This is extremely common. Compulsive, or let's say impulsive. In Hindi, there is a word called khujli. You know, if there is no opportunity in the market and you're seated in front of the system, as if something is biting you, as if you're impatient. Why am I not doing anything? Just for the sake of doing, if you do that, tell me how many times have you made money out of that? Most of the times you would have probably lost, and you would say, why the hell did I do that trade? Now, don't take my word for granted, but I can share one interesting fact. Uh, Mentorship traders, those with whom I have personally interacted before they joined, during, and now that they are trading, one very common, distinct change that they have told me. I asked this question to them that, what has been the distinct difference you've noticed in your trading? And one common answer that I've repetitively got from them is my number of trades has come down drastically, and my profitability is the same or better. Less is more. How did the number of trades come down? Because I am no more compulsive. I am waiting patiently for the right opportunity. When the iron is hot, that is when you hit it. You don't keep on hitting it all the time, it will not bend. You make an impact when the iron is hot. And so for that you need to wait. And this is where the patience comes into play for a trader. Patiently wait for the entry. I have personally done this. I do this on a day on day basis. There are days when I may not get any trades. I prefer to trade the daily time frame and the 75-minute time frames. And of course, I don't get trades. Few days in a month goes when there are no trades. That's completely fine. But in a day, I can get 3, 4, or 5 trades. Right? So the parameters based on which an investor looks into the market do not change regularly. The parameters based on which a trader decides his entry exits, it changes every minute, which is price. So one guy is looking at price, which is volatile, which is changing, ever changing. The other guy is looking at valuation, which is changing, but the rate of change or the regularity of the change is not as high as price. So the patience for an investor is more from the perspective of its exit. If you believe in your in the company, if you believe in your decision, then hold on to it. Show some patience in terms of your exit, if at all. But if you're a trader, you need to show patience. Trust me, yes, very important. But the patience for a trader comes from the perspective of entry and not exit. If you do this, if you're listening to me and if you think that there's merit to what I'm saying, but you've never looked into it in this manner before, give it a try. Just experiment yourself for a month. A month is not bad, right? You stick to your setup. Tell yourself, I will not do any form of compulsive or impulsive trading. When I get a trade set up, then only will I trade, or else I will not. If that means a day goes without a trade, 2 days or 3 days goes without a trade, so be it. But trust me, when the opportunity comes, you will make up for those lost 2 to 3 days. Not to mention, lesser trades means lesser commissions or lesser brokerage. You will save on the cost factor also. So that's the take I have for the stock market is a device for transferring money from the impatient to the patient. Completely agree with Mr. Warren Buffett and many of his other quotes. And I still feel that if he was a trader, he would have still stuck on to this wonderful quote of his. But a little bit of twist from my side, the patience for a trader is from the perspective of the entry and not from the perspective of the exit. I hope you like this attempt of mine. Do share your suggestions and feedback like you always do. Till then, a new week, a new month is starting tomorrow. I hope you'll stay safe and you'll trade really well going forward. Trade well, trade well.